What's going on, YouTube? In this video, we're going to talk about Palantir, ticker symbol PLTR. Year to date, up 152% over the course of 1 year, only up 103%. So Palantir builds and deploys software platforms for intelligence community in the United States to assist in counterterrorism investigations and operations. Okay. Personally, I have no clue what that means. It is something that I will have to look deeper into to understand before I begin buying this company for a long-term hold. However, this is something I'm very interested in doing. So we're going to go over the financials on Palantir. Revenue, gross profit, net income in order. We can see our revenue, gross profit growing. Our net income is also starting to find its way higher as well, which is good to see. We'd like to see this grow more, but at least it's heading in the right direction. Okay. Net income. Here's just another chart of the net income growth. So we had a pretty big decline. Obviously, 2020 it is what it is there. But now we're headed back above positive in that direction anyway. We've got our gross margin sitting at just shy of 80%. We have our net margin, which is trending higher and looking like it might just start turning positive relatively soon, which is awesome. Revenue and gross profit year-over-year change starting to slow down in terms of year-over-year growth. You know, something to keep an eye on. We really would like to see this kind of at least be up in the mid 30s, 20s at least, not way down here, you know. So especially in a growth company that we are expecting them to eventually turn a good profit. But return on invested capital used to be good, dropped, and then now they're working on recovering that. Hopefully soon we can see that back into the positives for return on invested capital. Cash to debt. This is fantastic for me. I personally am a huge fan when a company has more cash than they do debt, total debt, mind you, not even just short-term debt, but total debt. So super strong balance sheet right there. Net income, free cash flow. Here's our net income, and then our free cash flow is higher than our net income. Probably has a lot to do with our share dilution, so they're able to claim a lot of stock-based comp of some kind, and that is growing their net income faster than what they're, or growing their cash flow quicker than their net income. So, and we might even be able to take a peek at that up here. So yeah, we got our net income, stock-based comp. Basically, our stock-based comp is the majority of our free cash flow. So that proves that. But we can see our free cash flow is trending in the right direction. Unfortunately, the only reason we're positive free cash flow is because we're issuing more shares. However, our share issuance is, at least our stock-based comp is beginning to slow down, which is good. We used to be at 1.2 billion, now we're down to 500 million. So that's good. Common issued stock beginning to slow down. It's flat. So they're not really issuing too much more common stock. So that's okay. That's good. And then our capital expenditures, I mean, these are nominal numbers. You know, you're talking 20 million. They're sitting at $30 million in capital expenditures. So not a big deal there. All right, next up, we're going to do comps. Let's see here, 4 other companies to compare to. So on the Palantir side, we have a few red flags, obviously. Return on equity, return on invested capital, both negative. Our operating cash flow is higher than our net income, which we've already gone over. We kind of we understand why. Our share change, we've seen that as well. They're basically, this is attributed to this, which is why this is higher than that. You know, I mean, it's just all the stock-based comp that they're giving out, which is why their share count's higher, which is why our operating cash flow is higher, which is why it's higher than our net income, right? So analysts have a price target of $13.25 on this company. Currently, this is trading at $16.22 per share. Analysts have a revenue growth of 23%. They do not have a growth rate on EPS on this chart. So we come over to here. We do have a growth rate over here, though. Our EPS growth rate is 20%, revenue growth rate 23% on this chart. These 5. But we have our market cap over here. Palantir is second in line. One thing to note right away is how much different our market cap is to our revenues. So I think there's a lot of optimism within this industry here. Revenues, gross profit, and income comparison. So Palantir, again, on your left-hand side, we can see Autodesk is your leader by quite a bit. Another thing to note is the net incomes across the board on these companies is very, very minimal. So this is probably going to be a low profit margin industry by the looks of it so far. So we have our gross margin, we have fantastic gross margin, and then our operating margin. Obviously, Autodesk over here is the leader, and then same thing with profit margin. So profit margin at Autodesk 16.7%. So for me, above 15% on profit margin is great. I think that's going to be potentially a struggle for Palantir to get there, but the trajectory they're on right now tells me that it's possible. I think they can possibly pull it off. And we'll have to see, and that'll be something that we're just going to have to forecast and assume that they can grow into these margins that Autodesk has. You know, they've got a fantastic balance sheet. They are on a good growth trajectory, so they've got good things going for them. I have no complaints really on this company yet. Our free cash flow, you know, growing. We've seen that. It's not the leader of any of these companies right now, obviously. Return on invested capital, same thing. And our price to earnings, obviously, we're negative. The leader of the group right here is Autodesk by a good clip, especially in terms of profit and everything else. So Autodesk probably a leader, but Palantir, I think, has a pretty good chance of catching up. I mean, we'll see. You know, this is something that you have to opinionate and dig deeper into the company to understand how is the company going to grow more and take market share from Autodesk, if that's how they can, or if they can just continue to grab more market share overall. So over here at the calculators, we do have a negative EPS still. We are just barely negative on the EPS, but we can still go through a few other valuation methods over here on this company. We have a market cap of $35 billion. Cash equivalents, we get to subtract. We take away $3 billion from our market cap. We add back in debt. Cash from operations is 400 million. So it's going to take 80 years for this company to earn its current market cap. So that's not good. That's really overvalued. So that's something to consider. We have our price to book. We have a 5-year average of 14.9, and currently we're at 11.39. We also have a forward-looking PEG of 3.04, which is super overvalued on this company as well, okay? We also have our DCF that we can kind of get a price tag on, but not really, because we're barely free cash flow positive, that it's not going to really give us much of an accurate number. But however, we do have an average growth rate of 17%. Analysts have 25%. I gave them 20% growth rate, which gives them a DCF price per share of $2.13. Now, the one calculator that I will somewhat trust, it's the one that I'll take the price tag from out of everything when it comes to a company that is just about profitable, but not quite. And that is right where Palantir is, because I can at least get an idea of a relatively close forecast of the future of this company, right? So analysts have 23% future in the next 12 months of EPS, and their PE in the future will be 69.42. Okay. So we take those two numbers. We also have our lowest EPS growth rate. We have three different sources. That average growth rate is 20.81. Okay. 20.81 goes into 72, 3.46 times. 3.46 goes into 10 years, 2.89 times. So what we're going to do, so we're going to double our EPS one time, two times, and then 0.89 times. So just shy of 3 years. So I'm going to give them a 1.8 for our future EPS. This is like 10 years down the road. So that gives us today a fair market value of $18.72 and a purchase price of $13.11. This is a 30% margin of safety. One thing to note on this one is analysts have this at $13.25 right here. I can take those two numbers and relatively comfortably assume that's going to be my acceptable buy range is around $13 per share. Now, analyst price tag is their top line, not their bottom line, like what mine is. Mine's my bottom is 13. So maybe even a bit lower you might want to search for instead of $13 per share. But at least it gives us an idea, right? So we're not going to exactly know the price because we just have so few data points to go off of. So $13 is roughly the range of a buy price on Palantir right now. Obviously, we can see their growth trajectory, and it's looking good, right? So overall, Palantir, in my opinion, looks like a great company to potentially invest into. I would also do a little research on the company, on the forecast of what the company thinks they're going to be doing in the future. I will be doing that. I'm going to figure out exactly what the heck Palantir truly does. This is a company I've always just heard about. I've never really looked into it all. But I think it's time now that I've seen the financials, we got some data to look at. I think it's time to start looking into this company to figure out if this is something I want to add to my portfolio or not. Based on these financials and the balance sheet and the trajectory of the company, I'm going to look deeper into it. But again, I'm not going to go buy it without knowing more about the company and the forecast of the company and how they actually make money as well, and see if I can understand it. And if I can't understand it, I might not. I might not buy too much of it. I'll probably still invest something into it, but probably not a whole heck of a lot. Over here at the stock chart on Palantir, we don't have a whole lot of data on the weekly chart, but we got a little something to look at. We appears to be a resistance line here at like 1950, and I would say a support range here around 1350 per share, which is about where we could look to buy this company, I think. Potentially, right? And it was just there not too long ago, earlier this week actually, and would have been maybe a good buying opportunity down there. Currently, his stock is on a rip. It's at like 1606 per share, and it looks like within the weeklies here, we're looking at maybe that is a 1650 range as a resistance point as well. On Palantir here on the technicals, I would look to see this one's tough because I think if the market pulls back, this Palantir is going to get probably gobbled up, right? Palantir is probably pulling back to this what could be a trend line here to 11, 10, $11 per share, which I think would be a very good buying opportunity on Palantir. Now, if the market decides to continue higher, I think Palantir is joining it, and it's at least headed up to 1950 per share. Be curious to see. I don't know if it'll break out of that until the next financial release comes out and the next earnings report. Um, I think unless some other news comes out behind the company that might help push this company a little higher. But based on technicals, it looks to me like it's just going to be like this. It's just going to chill in this range, and then it might eventually break down or break up depending on what the market does, because I think it's going to be somewhat correlated to the market. However, if you do look, the market pulled back quite a bit recently, and if we go with the just go with the SPY, the SPY dipped down quite a bit, right? I guess it wouldn't be quite a bit, but it fell, whatever, 30-ish dollars per share. And Palantir just kind of, it fell a little bit, but it kind of hung out, right? It initially dropped and just kind of sat there, and the market continued to bleed a little bit lower, and Palantir did not. So I think that kind of tells you maybe Palantir's found a bottom at right around this $13 range, right about where analysts are expecting have their price target. So something I always kind of pay attention to in the financials is comparing it to the market to see how it trades against the market. And if it's kind of holding down here, then that kind of might tell you that this could be a potential really good support range on Palantir. So that's kind of what I'm thinking on it. But that's it for Palantir. If you found that this video was helpful for you to make a decision, or if the information was great for you or whatever, drop a like and subscribe and let me know in the comments what you thought. And we'll be back later with another stock analysis video.